Okay, good afternoon, everybody. I hope you're there. Hey, Jake, how you doing? Awesome. Let's rock and roll here shortly. I'm checking on one other thing. I'm trying to go live over on Instagram. I don't know if I am or not. But you know, I'm not going to worry about it right this moment in time. So you're over on. Okay. Yeah, and without a doubt, Jake. Okay, I don't know if I'm live or on. On Instagram or not, but that's okay. We're going to go ahead and just press the go button on everything else. So I'll leave that up. So, all right. Whoa, world travelers there. Hey, Graham, how you doing? So I got a question for everybody. Have you ever sucked the oxygen out of the room like a Hoover vacuum cleaner when a trade went against you? You know, that's one of the things. Hey, I have to lift my hand. I'm guilty of doing that back a long time ago. But you know, since I discovered AutoPilot trading and created AutoPilot trading conditional fire and forget orders, I don't do that anymore. A matter of fact, I'm going to be talking about very quickly about what the heck happened with Palo Alto Networks. Palo Alto Networks got slammed, and dadgummit, I lost $571 on Palo Alto Networks. I should be really ticked off, right? I should be jumping up and down screaming, right? But you know what? I don't have to, because with the AutoPilot trading process, we take profits on strength. And so, yeah, today the trade went against me for $571. But since the 5th of January that we've been in this trade on Palo Alto Networks, we've taken out over $15,000 in profit. So if that sounds like something you're interested in, check us out over. I'll leave a link down in the description. But enough about that. Today I'm going to share with everybody a secret about how to determine profit targets if you're way below and you're trading against the trend. I don't know about you, but if you're over there on YouTube or if you're on Instagram or wherever you're joining from, let me know. You know, have you ever traded against the trend? And how well does that work out for you? How well does that work out for you? I know for me, hey, it's slapped me up the side of the head numerous times, but stay tuned because we're going to be talking specifically about that very, very quickly. So let's jump over to here real quick and let's take a look at what's in the news. Cybersecurity stocks plunge on fear of Palo Alto Network. Fears Palo Alto Network will spark price war. Now, normally, when a stock has earnings, it will stay within a 10 to plus or minus 10% of where it closes the day of earnings or after earnings. Palo Alto Network plunged over 20%. I think the last count was it's down 29%. I mean, if you were holding on to a full position of Palo Alto Networks, it ripped your face off, let me tell you. But the victim here is not just Palo Alto Networks. What about what it did to the other cybersecurity stocks? What about what it did to ZS? What about what it did to CrowdStrike? They moved in sympathy to Palo Alto Networks and got slapped down also. Again, we had been in both of those stocks since early in January, had taken out multiple, one of them, we had been in CrowdStrike since October of last year. It was up close to 100%. We had taken off profits at the 10% to 20% level, and then we were well up. So I let the remaining 20% of my shares ride through. Well, it wasn't earnings. It was just a sympathy move down. But it pushed me out. I hit my trailing stop, but I was still up on that portion of the trade about 70+%. So yeah, it hurts in a lot of ways because I didn't want to get out of that stock. At the same time, though, well, yes, it hurt. I can sit there and go, I'm okay with this. I'm good. And I'm ready to trade again. But cool thing about this is we're going to take a look at both ZS and CrowdStrike and NVDA when we get over the stock charts and say, well, when should you get back in? Do you ever have that question? If you have, just drop a comment down just drop a big Y down in the chat box so I can know where everybody's coming from. Especially anybody over there on Facebook, leave just drop a note, or on Twitter or X. Just say, yeah, I saw that. Wow. So what else is going on? Let's go on down here just a little bit. Hot AI play and NVIDIA partner tumbles on weak sales. Then the Magnificent Seven. Are you interested about what the Magnificent Seven is doing? One of the things I am is that I'm not per se trading into the Magnificent Seven, but I like to keep, it's almost like the Magnificent Sevens is like almost its own index, because in reality, it value-wise takes up more room on the S&P and also the NASDAQ than almost 90% of the other stocks. These 7 stocks fill up, I want to say, about 70 to 80% of the value. So let's take a look at what's going on with the Magnificent Seven here. So, dubbed the Magnificent Seven, Apple, Microsoft, Google, or Google parent Alphabet, Amazon, NVIDIA, and Meta platforms, and Tesla had great big gains in 2023. We're all aware of that. There's a gains in 2023. But what about now? Amazon, I think right now of all of these, Amazon represents the best performer, and potentially because it's hanging up here really nicely. Now, it is kind of a slow and steady mover. You're not, it's no longer really a growth stock. So you're going to get moves of approximately, 5-10% on a monthly basis. And it just gradually moves on up. And that's okay. What about our buddy Google? I don't know. We don't have a chart on Google here. But Google also is holding up about its buy point, about 139.42. NVIDIA, everybody's waiting for NVIDIA to report after hours today. If they get slam dunked, I tell you what, I'll put out a short a little bit later today, on my YouTube channel to talk specifically about NVIDIA. Because NVIDIA may hold the keys to what happens going into the rest of February and into March, which tends to be your second most weakest time of in the market, next to our weakest. Does anybody know the weakest month for the market? If you do, type it in the chat box. What is the weakest month performance-wise in the market? Let's see, Jake, what do you got to say here? Bullish reversal on Crowd. For earnings, not too far away. I agree with that wholeheartedly. That's the same 20% drop after a 100% return in, SMCI. Graham was just absolutely a beast. And now what do we do? There's a temptation. All right, you're absolutely right. It's September, and the buildup in August is sometimes the next to next to the weakest, but also there's this lull in the market between February, mid part of February into March, and then it starts picking up as people start running into the deadline to invest in their retirement accounts with a due date of 15 April. So that's oftentimes why you see a surge in the market during April. Let's see, NVIDIA, we talked about that. Tesla, okay, Tesla, ugliest performer of all of the Mag 7, and it continues to slide. Note, it is below, and this I think is I want to say this is the 50-day moving average, or 50-day, or the 40-week moving average. It's below that, acting extremely small. I had done a forecast. There's some technical support that suggests that if we continue to fall, Tesla's going to make it down to about 152, and then also if it drops below that, we're looking at $118 to $100. Woo! Can you imagine buying Tesla for $100 again? So what else do we have going on? We've got Mag 7, Apple. Apple is just absolutely rotten to the core and fall into the ground, and it's just laying out there, rotting. But we'll take a look at that also. Microsoft holding up really well. And so with that, let's go ahead, and if you're on the YouTube channel, hey, give me just let me know that you're there. And also, if you haven't subscribed, hit the subscribe button, hit the bell. You'll get one of these live streams every Wednesday. I'm going to be walking everybody through my routine for the market, and we'll take a look at the stocks I'm holding, and then secondly, what I'm looking at getting into as we move forward. So right now, speaking of which, let's go ahead and jump over to get back there. I love all the controls on this thing also. Okay, thank you. Yeah, I'm not on Zoom. This is not on Zoom, but absolutely. Is it Ari? Absolutely, Ari. I would be looking at doing the inverse ETFs. That's what we do with the AutoPilot trading checklist, pre-flight checklist we put out every week. And that's one of the things we look at. However, we still want to follow the technicals and our precision entry point routine that tells us when to get in, so we're making smart trades. So let me do this, and do this. I'm switching screens here, folks, over to my I hope it's the right one. Nope, that's not the right one. There we go. Okay, let's take a look at what the heck's going on. Hey, let's talk about what the Qs, the NASDAQ. This is a daily chart. And one of the things I've done since last week when we initially did our first Market Tech Talk live stream is rather than just showing you my computer screen with my phone videoing it, I decided to use StreamYard and jump in so you can see the charts much better. A couple of things to notice but I don't think, nope, it doesn't. Unfortunately, my drawing tools don't work with StreamYard, but that's okay. Notice what's going on here. We have the moving averages starting to cross over. This is a daily chart. the NASDAQ or the Qs have dropped to to this breakout area. What's it going to do from here? We have put in a very classical move where we moved up from here, get up there to there, came back to a higher low. However, on the rally attempt, what happens? We get all the way back up to into a lower high, and then is reversed and is now putting in a lower low. So for the moment, at least, get that. For the moment, at least, we've got a short-term downtrend started on the NASDAQ. We'll see where it goes from here. Notice it needs to take out this level here, about the 416, which is almost right square dab on top of the 50-day moving average. For what we're looking at right now, the moving out, I would look at approaching from the top, and this is part of the answer to how to use the moving averages to determine where things are going to bounce, either down or up. Think about it as the moving average is a dynamic level of either support or resistance. And if you're approaching a moving average from the upside, that is a level of support. However, now that prices is broken below the 8 and the 20, and notice the 8 and the 20 are also facing down. This is telling us that it's in a catching mode. So any relief here may take us right back up into the moving averages, and there it would break down from there. And then that would be an ideal area to contemplate, or maybe have an opportunity to take a short position, or, and I'll just share this with you right here, guys. I hope that you'll like, this. And this is the leverage inverse ETF, SQQQ. If the Qs, pull up into those moving averages, well, SQQ is going to pull down into its moving averages. And the moving average right there is the 8 and the 20 again. And those are EMAs, in case you're wondering. 8, 20, 50 up here. And then way down somewhere, I have a 200. No, it's actually up on this particular chart. It's way up there. I have the 200. And so I would be anticipating a pullback down into the 8 and the 20. I would use basically the 20-day moving average. But here's a big secret. And I'm telling you this because I see too many traders make a mistake when they plan their trades off of moving averages. They plan their trades on where the moving average is today, but the moving average tomorrow will not be there. So how do I do a really quick estimate? If I don't want to calculate what it should be, I just draw, we're back in geometry class, guys and ladies. So I just draw a little parallel line to that one, and it's not exact, but it tells me that tomorrow, my 20-day moving average, if that's where I expect it to move back to, that would be at approximately $11.88. So I can put in, here's the exercise and the drill. If you're interested in trading SQQ, put an alert just slightly above that level. Let's say 2 or 3 cents, because it's it's an inexpensive ETF. So I have a couple of questions here. E.g., No. Graham asked a really great question. Do you ever change the MA length to more precisely match the prior behavior of an individual stock? And the answer to that is no, I do not. What I do is I leave, I basically have the 8, the 20, and the 50, and also on some of my charts, I will have a 34, because a lot of day traders, a secret, the day traders use the 34 to trigger some of their trades. So that's just a little secret I'm sharing with you. So what's going on there is those are EMAs, and then my 100 and my 200-day moving average, I use simple moving average. I've done that and I used to get caught up in the trap of trying to match the moving averages with the particular personality of the stock I'm trading. And you want to know the truth? It's just too stinking hard. I would rather watch the personality of the individual stock that I'm trading react with the moving averages I've already set in place. And so good stuff. And then on the only time I make a modification to that, and I'm glad you asked, we might as well cover that right now. I will be back to SQQ in a second. When I switch over to the weekly chart, I do the 8 period. Okay, the 8 period comes really close to the 8 week, comes really, really darn close to the 50-day moving average. The 20-day comes really close to the 100-day moving average, and the 40-day, which is way up here, comes really close to the, guess, which one? Which moving average do you think the 40-day comes close to? Let's go over back to the Qs. Yeah, on the daily chart. Which one does it come close to on the daily chart? Here's one that comes close to it right here. That line right there is the line from my 200-day moving average. And so if you guess 200-day moving average, you're absolutely right. Let's take a look at IWM really quick. IWM, Russell. Okay, Russell appears to be continuing its plunge now down to, and I'm going to take this out. I'm going to remove that. Let's just look at this on a weekly basis. Notice, I mean, we can get all the way back down here. I don't know if it's going to or not. What I will do, though, is on the weekly chart, looking at the just a straight Fibonacci's, I will lay in what I call the magic fib box, which is the 618 to the 382 box. Oftentimes, when you start a pullback, according to not only Fibonacci but also Charles Dow, that's the target for a pullback on any nice move to the upside. So with that, what does that translate to over on the daily chart? Well, it translates to this. Is I will put, okay, since I have a low right here, I will put in an alert about the 190 level. I will put an alert also just above the 200-day level. And the reason I'm putting alerts slightly above the levels of support is because I want to be notified when price action is approaching that level. So that's what we'll do with IWM and the others. So, okay, so what am I doing with the indexes right now? Right now, I'm waiting. I'm basically just waiting. So any other questions? And if you have a stock you do want me to take a look at a little bit later, you can drop that note in the box. Okay, who wants to see the stocks that I'm entertaining buying first? Or would you want to see the ones that fell out of the sky and went splat on the ground? Which would you prefer to see? And I'll wait for your comment. How did you know I was going to go there, man? I am going to go there. Okay, Jake. Let's take now. Some of you now, if you are an AutoPilot Premium member, Yeah, we'll take a look at buying ups. If you're not you guys get, the specifics of where I see that that's another good one, Jake. Thank you very much. You get the specifics of the technical analysis I do on a weekend and specific of where we're going to basically take action. And so, okay, I'm making a list here. Okay, we will come back to those, folks. So the polling centers are closed. Now, I've got some really great entities to take a look at. We'll run back up to spiders, and I'll tell you why I don't basically spend a lot of time. Well, I always monitor what the S&P is doing simply because that's what many of the institutions measure their performance against. And so I want to know what I'm doing. And plus, I measure my performance, against it, because we beat the S&P by, the last 12 years and averaged 37% per year, beating them without having to keep my nose in my, looking at the charts all day long. Matter of fact, what's the most accurate hour of the day to trade? There's another test. Let's see if you can answer it. Again, what's the most accurate hour of the day to trade? There's two acceptable answers. Go ahead and drop it in the chat box, folks. What is the most? Okay, let's take a look at a spider. Spiders, they're acting a whole lot like the S&P is. Can you see the finger better? The hand, I mean. There you go. And so what we got is we got kind of a double top thing going on here. We rallied up to retest it, but it didn't. It failed. This is a failed rally. As soon as we take out the 20-day moving average, you got to close below it, or take out that low right there on the S&P. That will put us into at least a short-term downtrend. Now, that downtrend could last all the way until the end of March. That downtrend could last until we get a correction of, let's say, 7 to 10%. That would be very reasonable. I don't know if I have the option to do a black. How about is the arrow better? Yeah. If it's not, that's. Yeah, unfortunately, I don't have that opportunity with the Thinkorswim, I think, to change the color of my arrow. But I'll take a look at that a little bit later to see if I do. Let's see. I don't know. I will next time, Graham. So spiders. And so if it breaks down below this low right here, let's say that is the 490.92 level, then that sets us up into a zigzag type formation where we'll zig down, back up, lower, high, back up, lower, low, back up, lower, high, and we could get into a downtrending channel, and then you just bounce it below the two tops and bottom of the channel but what happens if it breaks the 50-day moving average and we get into a significant downtrend? How do we want to trade that? Stand by. I'll be sharing that in just a bit. Let's see. Let's go. Okay, here are the stocks you guys asked for, ARM. Okay, Jake, ARM is looking real. I think ARM is looking really, really good. One could make a case that we've got a nice little flag here at the and we've closed back above the 8-day moving average right there. At the same time, though, and it's a strong stock. Where did it get down to? It got down into the magic fib box, as we see right there. And if you're not using these magic fib box, I encourage you to learn how to do this. If I can get that, nah, you bugger. We'll do it over here. There we go. Price actions, I have got into the magic fib box, as you can see there. And that's the 618, the 50, the 38. I would still put alerts just slightly above the 50, slightly above the 38.2, and look to move up from there. So with that said, though, we've got a hammer from yesterday. I would wait, and if we've closed today where we are, now we have a hammer followed by a bullish engulfing. That's a pretty strong reversal candlestick. Is it worth taking a nibble at the midsection of today's candlestick, about 120.52, with a stop immediately below this hammer? Tomorrow, that might be something you want to do, Jake, but I would know exactly if I take a trade in the middle of today's hammer and it drops that low, that's about a slightly over a 5%, slightly over a 5% drop, and you can size appropriately. With the market showing the weakness that it's showing right now, I would definitely say look to a half to a quarter position if you have to be invested in it. You know, simply that keeps you out of trouble. I believe that there are the best hours to trade the market is the last hour and after hours. I know it's a trick question, but like I said, a lot of people do trade it. If they are basically scalpers, day traders, and that kind of stuff, they will go in for the first hour of the day. But if you do go in the first hour of the day, just be really careful, because remember, the candlestick for that's going to be that day's candlestick, it will not be completed until you get more towards the end of the day, like in the last hour. Then if the candlestick needs to tell you a story, at least then you know what it's saying to you, and then you can plan accordingly. And then after hours, of course, after hours is when, if you place your orders after hours and do your study after hours, what that does for you is it removes a lot of emotion from your trading. Because emotional trading, well, the guy who said that when we get emotional, our IQ drops. And so why let the normal day stuff of the regular market ups and down and ebbs and flows and ins and outs and all that kind of stuff, why let that stimulate your emotions to where the place you make either impulsive, compulsive, or just plain stupid decisions? And I'm talking for myself, guys, because I used to watch the market all day long, and I have broken so many computer keyboards by just slamming my hands down on them because I was so frustrated. But I know none of you would ever do that, or at least you would never admit to doing that. But Dennis did that. Anyway. So let's see. Let me catch up on the questions here, folks. 10:30, 3 p.m. Great. Oh, Monster. That's an interesting. So let me make sure I have those all. So let's jump over here. Jake had that one. Monster drinks. No, that's MicroStrategy. Okay. It's MNS. MN. Let's take a look at that. Okay. Looking kind of interesting, Graham. It's got, pretty good volume, nice pullback. And look down here. Look down here to what I'm seeing. This is a excellent reduced volume pullback. Of concern, what I would like to do, though, is let's just throw a quick Fibonacci on it to get, and this is just a general grab from the last high to low or this high to low over here. And as you can see, it's just starting to enter into the box. Where's it going to go to? We've already broken the breakout area. So I would look more towards a pullback back to the, let's say the 629 area or the 630 area, and put an alert there, and then wait for a reversal signal and wait for your momentum to shift back around, because on the weekly charts, the momentum, as you can see here, is still, I've got a pretty significant negative divergence going on here on the on the weekly chart. You can see across there. Let me heighten, make that. What I will do is I will make my drawing lines bigger and fatter so you can see them. There we go. So you go that, yeah, that's showing us some negative divergence. So next, not going to spend a lot of time going into the individual ones, but we got a couple of Bitcoin type entities. And which one is this? This is Bitcoin shares. Yeah, on the daily chart, it's pressing on up. Again, it looks like it's getting kind of toppy. I would wait for a pullback. Again, just lay in your Fibonacci's. More often than not, and this, like I said, was observed by Charles Dow back in the 1900s. And it was observed, well, actually Fibonacci didn't observe it. Does anybody know what Fibonacci was doing when he developed his concept of Fibonacci's? Does anybody know? You get bonus points if you know this. Yeah, IBT, BlackRock, that is the best Bitcoin ETF. FBTC. And I'll bet you everyone. Now, the question you have to answer for yourself is, if you have one entity that looks a lot like another entity, does it make sense for you to be in both of them? And so I encourage people to choose one, especially if their charts look just alike, because if their performance is just alike, and again, you measure the performance and know exactly how much it's going to run. If the performance is just alike, then what value added is there of doing both? Yeah, FBTC Fidelities, yeah. So let's go ahead and did I miss anything, guys? If I did, throw it in the chat box, because the chat box is driving by. I am going to start with PLTR. PLTR has just had a rambunctious move to the upside after it did a really nice consolidation in that. And that's a pretty pattern where we basically came down, consolidated for 1, 2, 3, 4 total, almost 5 weeks. Then just after earnings, it took off like a rocket ship. 60 to 70% of all stocks that break out of the stocks that break out will do a pullback towards the breakout. Now, this can increase the pucker factor a lot for traders who trade the breakout, and they're thinking, hey, I'm all fat, dumb, and happy because I'm breaking out, everything's cool. Unfortunately, then it does its several percentage point pullback, and they go sucking the oxygen out of the room like that vacuum cleaner we talked about earlier. And then we basically, from that, and that's why I wait for our pullbacks. Now, this PLTR is doing an excellent job of a pullback. The things that I am not concerned about, but that I'm going to be watching, is notice my momentum indicator, TSI, and my market forecast has started to roll over. I have time to wait. I do not have to be. I have time to wait for it to pull back even more. This is another time where I can, well, one, I can throw my Fibonacci on here, and I will. I'll throw my Fibonacci on this, and let's just take a real quick look at where that breakout area is from a Fibonacci standpoint. And I'll be darned, it's right at the 318, not the 318, the 618 retracement of the Fibonacci. So now I'm just waiting for a reversal candle and and also my momentum to shift back up to the upside. What's my momentum on my weekly chart telling me? Yeah, I'm okay. Positives on the weekly chart haven't popped up off the top, but I'm looking at PLTR. I like it, and I'm going to put an alert down here about 2205 and jump on it from there. And Neil, thanks for asking about the arrows. The arrows are part of the indicators that we utilize with the AutoPilot trading service. And the arrows, some of them were developed by a couple of the guys who do our coding for us for a Thinkorswim platform. So really good stuff. And let me say, hi, sir. How are you doing? Nice strategy. Thank you very much. Do I think the market is going to crash? Great question. I don't know. I mean, I'm just going to be blunt with you. I don't know if the market's going to crash or not. I think that this is an opinion. This is not based on anything technical right now. Because oftentimes you don't know the market crashes until the market has crashed. That's basically, we don't know we're in a bear market until it's in a bear market. That's the way it works. And it's very easy to look by 2020 hindsight to go, oh yeah, I saw that one coming, which is baloney. Well, in a lot of cases, baloney. But what I can tell you is that I think the conditions are ripe for at least a strong correction, and a correction down 10% plus. I think if inflation continues to raise its head and blow smoke, or not smoke, but fire out across, not just within the United States, but worldwide, that there's a potential that we're going to basically continue to fall. The market's going to continue to fall and go into a deeper correction. We'll just basically going to have to play with that by ear as we go. Right now, I think we're on the cusp of a top. The question, though, then is how far is it going to fall? Now, once we start putting in a pattern to the downside, then we can start measuring where we think things are going using Fibonacci's and other types of things. So anyway, let's jump over here to Palo Alto Networks. And okay, here's where we're going to have some fun. I like this stock. Now, this is a Bitcoin or a crypto stock. Notice where it's at. It ripped to the upside. I mean, it's a fairly inexpensive stock. It ripped to the upside, provided this last move from this low to that high, 88% in how many days? 8 calendar days, 7 trading days. That is phenomenal. Take a look at, go over to the weekly chart. What about this move from here up to there? Well, it was even bigger. No, and let me make sure this is still the same one. There we go. Now, on the weekly chart, which I like to bounce between the weekly and the daily, look at that. 108% in how long? In 28 calendar days or 5 bars. That's 5 weeks. 5 weeks. So when a stock does that, you can you can look for that personality to repeat itself. So Mara, is another one that I'm very, very much interested in. It's not a cousin, but it's in the same industry, of course, as Coinbase. Coinbase just ripped it to the upside and has pulled back into the magic fib box, as you can see here on the weekly chart. What about the daily chart? Again, let's watch it. Now, we see that what has happened is the TSI that you see down here, you can see has dropped below the, and the market forecast is still continuing up towards the 80 line. And so this is telling me that I can expect us to pull down a little bit deeper. How deep? Once you break through one of the Fibonacci lines like we have there on the 618, it increases the probability we're going to drop down to at least the next one. So that's giving me a target of, let's say, 155 for an opportunity to jump on that trade. And then if that breaks the 50, then this is the next one down at 145. And when you see that, always look to your left to see if there's some levels of past either support or resistance that would support prices falling to that level. So Coinbase, I really like Coinbase. So now that we've seen the good, we've seen the not so good. Now are you ready for the bad and the ugly? You ready for the bad and the ugly? And so the bad and the ugly. We'll start with Palo Alto Networks. And again, dadgummit, I lost $570 on Palo Alto Networks. Oh, but I can be happy because I made $15,000 since on Palo Alto, and that's not options, guys. That's trading the stocks themselves. I do trade options, but I only count for our autopilot trading when we're trading the actual stocks themselves. And so let's take a look at Palo Alto Networks. A lot of people would say, "Oh, it's a great opportunity to buy." Well, is it really? We can make a case and say, well, yeah, we're bouncing off the 200-day moving average. That's a great place to buy. At the same, that is not an absolutely truthful statement. Why? Something really ugly happened to cause us to fall from here down to here. Something really ugly happened for that. And it does. I mean, you can go and read the news report. Something ugly did happen. But that's a huge drop. An out of the ordinary or out of the average drop. And so for me, as soon as we break below the 50-day moving average on increasing volume, this puts Palo Alto Networks in the do not buy part of my watch list, and I would be looking to do short type trades on Palo Alto Networks coming down. What would that short trade look like? And again, I've got to get my, if any of you guys utilize, yes, no, James, I had like a very tiny position. We sold Palo Alto Network on the second buy that we did. We sold all of it prior to the close yesterday. And then I had a small position that I lost the $500 on. And so, yeah, the software is with AutoPilot, and not is with AutoPilot Trading, but is part of Thinkorswim platform. Check us out over at, I tell you what, Neil, what I'll do is in the description, I'll put a link. You can find how to check out AutoPilot Trading. We're glad, we love it when new people come on. Google about to break up. So do you have any alerts set for after hours in case that happens overnight? Yeah, Graham, what I do is I watch it. I mean, I'm in Hawaii, so um, I can see, after everybody else has gone to bed, I'm still up. And I can see what has happened after hours. And I'm always taking a look and saying, okay, this is kind of ugly. That's where we knew. And I want to give kudos to one of the guys who shot me an email and said, hey, do we still want to be in CrowdStrike? Because we had an order out for CrowdStrike. And let's see, what else we got going on here? We've got Palo Alto Networks, the other. So that's the ugly. I would be looking for a pullback. And this is what I'm being patient with, because patience is for it to pull back up towards the 50-day moving average and then take a down trade from there. It's similar to, let me see if I can see this. See, that's the worst downside of any week for a heck of a long time. And so I'd have to show you a downtrending entity to be able to so that's that. What about CrowdStrike though? CrowdStrike, it kind of did the same thing. Is that a one-day reversal? Is that a candlestick reversal pattern? We got down to the 50-day moving average and bounced. And the answer to all of the above is and the answer to the question is yes, it is a reversal. It is not a reversal candlestick. Prices are moving back above the 50-day moving average. All positives. All positives. However, that definitely is a new lower low. And oftentimes what we're looking for with a new lower low is for it to come back up, retest, go up to a certain high, then come back down. And it's that second retesting, and this is similar to testing a new high. If it comes back and approaches this new low, but buyers come in, that would be a time to take buy this. If we hold above the 50, that much the better. Also looking for the momentum lines to shift to the upside. Next is ZS. What about ZS? Again, ZS has earnings coming up. Similar type situation. Now on ZS, we get a little bit deeper. It's way 200. Excuse me, way above its 200-day moving average. We're getting a dragon. Well, not a kind of a hammer type of a doji at a level of past support. All positive. However, we're going to get a close below the 50-day moving average. That's where ZS should move from the I have to buy it, list to the I'll wait for however long it takes for that to turn around, or I'll look to trade it to the downside via options or that type of thing. So, okay. And let me make sure that I have hit on everything. And so that kind of is the secret of moving the moving averages. Let me find something that did fall here recently, but is back into good graces. And that would be Netflix. Let's go back a little bit. And I want to scoop this back towards last year. And so I want to be there. Hold on a second. I'm going to go back. And here's where Netflix started falling out of the sky last year. As you see, it's something to keep your eye on. Go back and look at past performance. We ran up, we hit a new high. However, I had negative divergence going here. This is on a daily chart. And then we reversed over. And as soon as we drop below the 50 line, that is your hardcore, basically, I do not want to buy this until it does some consolidation and it continues to fall. And then it did its ebbs and flows where it zinged back up to, in this case, the 20-day moving average did a reversal down to the downside, sold off. And I'll bet you that the sell-off from here to here, let me make sure that I have it look, from here to here and here to here is about equivalent. Let's take a look at it. Oh, then it fell. Then it really fell from the sky. So let's just take a real quick look. And one of the ways I use the Fibonacci's is I use the Fibonacci's also on from a extension standpoint. And that's what this is right here. I want to get a projection. Look at that. Isn't that pretty? I mean, it came down almost to the 100-day, 100% move. And that'd be a symmetric move with that downtrend right there. But then it had earnings and whack. And as soon as, and this was already, you know, Netflix, all this stuff up here was telling us, hey, Netflix is in trouble, gets whacked. And so what that means is, no, I'm not a buyer down here until it proves itself. So, okay, folks, that basically concludes us for today. I do have a couple other things. Bad. Okay. Is that a ticker, MK? And do you have the, what is the ticker on Lucid? I'll take a real quick look at that. Somebody also questioned Boeing. Let's see. I think that is still Boeing, right? Boeing is still Boeing. Okay. Let's roll back to present. Oh, that looks kind of ugly. Ugly. Let's take a look at the weekly. Also, I want to bounce between. Wow. Nice move to the upside, then falling like a rock. This was a lot to do. So yeah, this looks like it's going to repeat all the way back to 177. Thank you. Did I type that in right? That is. Yeah. On Lucid, you know, I know it used to be a really great company. Here's the weekly chart. That's looking kind of ugly. There's the monthly chart. It may be getting ready to turn around, but that's a pretty huge drop there. I would have to look over at the I would have to look at the stock checkup list on the Investor Business Daily, because right now what I'm seeing is that, you know, yeah, it had a really nice move here. And this is one of those. This is a perfect example. If you wanted to take this trade right here, where you came back and tested the low, that's a legitimate place to take a trade, or even over here. At the same time, where is your profit target? Where is your profit target? The profit target is at one of the moving averages. Is it already hit the 50 up here? My profit target, if I bought here, my profit target would be back to the 50. A lot of people will, where the 50 is going to be. So that would be about a 15, let's see, about an 18% move. But again, not the moving average where it is, but where it's going to be. So, wow, an hour's already gone by. I hope that you basically, you know, hey, drop me a note over on the YouTube channel. I will put the links to how do you find out about autopilot trading. And before you go, hey, got a great book over on Amazon. I wrote this with my son, Brandon. I cover in this all the secrets of autopilot trading. Now, some of the people who've reviewed this book, Michael Lamoth, for one, has basically said that this book, Trade Your Way to Freedom, over on Amazon, or you can get the e-version. This book is right up there with the top books on swing trading. So again, no, Neil, I will be back every Wednesday, and we do a live stream on Friday also. It's called Trade Your Way to Freedom. Thanks for joining. I appreciate the heck out of everybody. So aloha and God bless.